Good afternoon, everybody, man. Welcome to Traedz Talk, man, where we discuss and get prepared for next week's trading opportunities. Uh, while I have everybody, I see a few people coming in, man. Thank y'all for coming through. Let me go ahead and start getting us prepared for everything for next week. So let's go ahead and dive right into the conference room. Let's rock and roll, team. All right, all right. Right now, guys, as far as earnings, let's go ahead and start with the earnings as usual. Earnings, we don't have anything like no real major companies at this moment as far as our Tesla, Apple, Amazon, Nvidias, and so forth. Again, I will basically alert you guys when those particular companies do come up, so we can get basically ready to rock and roll on that. I mean, we do have our normal retail companies, as far as FedEx, Nike. And these other basically basic retail companies that's not going to really have a huge impact in the market. But these, if you are interested in looking at these stocks, these are the ones that will be coming up, guys. So right here, you can see it on my chart as well. Other than that, let's see as far as our economic calendar that we're going to have coming up next week, guys. Again, these are the ones that's highlighted as far as the level threes that may have some type of impact in the market that could add to volatility in the market. So basically broke it down to these levels. So right now, like I said, Monday we really don't have anything. Tuesday we do have the consumer conference that's going to be at 10 o'clock. Wednesday, which will be the 26th, we're going to have the new home sales data at 10. We're also going to have the crude oil inventories at 10:30. Thursday, we're going to have the durable good orders at 8:30, as well as GDP, and as well as the initial jobless claims Thursday. So we may have a lot more volatility because we have three major data that'll be coming out. So, that's at a level three. So we definitely want to keep your eyes peeled on that. And last but not least, Friday, we will be having the core PCE data. That's going to be at 8:30. Including the Chicago PMI at 9:45 and the Fed monetary policy reports that will be at 11 o'clock, guys. So these are the main economic data that we're going to be having, and these are the ones that you want to look forward to see if we have some type of volatility move in the market due to these economic calendars. Also, last but not least, as far as the announcements, guys, I was letting you guys know I will be working on some programs, not only pertaining to stock trading, but pertaining to health and awareness. So I will be working on the Traedz fitness and everything. So that's going to be pretty much, I will be having to record in the gym where, we will work on our health, exercise and getting our mental together. So not only just sitting at the computer watching stock trading, we're also going to work on our health as well, to stay healthy, to stay happy, and basically just continuously, profit and be successful in what we do. So this is what we're going to have. So let's go ahead, guys, and dive right back into our charts, and let's go ahead and rock and roll with that. Let me see if I turned off the intro. If I did, I'll turn it off. I apologize. Let me go back to it real quick. There we go. I got it fixed. But yeah, guys. Did I turn off my Twitch account on accident? Yeah, there we go. Yeah, I do apologize about that, guys. But yeah, so far heading into next week as far as SPY, Nvidia, or Apple. So far with SPY, that I was kind of doing a little bit of research earlier today, that we are still on a downtrend setup at this moment. We are coming from that 550 mark, because you remember, guys, I called this out last week that the main area that I was expecting that we would hit would be 550. And as you can see right here on my yearly chart, that was my intended target right here, where I got my white line already sitting in motion, that I told you guys that we were going to rotate from the bottoms to the top, and I said the next intended target was going to be around 550. From that 550 mark.
Show says, man, I just got 7 ads on your channel. That's crazy. LOL.
Oh man, Dynamite, I do apologize. Once you become a part of the affiliate program, it's like you can't control the ads, like as far as taking them off. You can control the time, but we can't control we can't like take it off once you become a part of the affiliate program, boss. I do apologize about that. I was trying to shorten it the best way I could. As far as, let me see, because the next one, I think I have it set for like every minute. Every 30 minutes, almost to an hour. So I do apologize about that, boss. But like I said, when you do become a part of the affiliate program on Twitch, we have no control over the ads. The only control we have is the time of the ads. I was trying to shorten it out as much as I can. So what I do is normally I'll play it at the beginning to get that out of to get it out of the way before we get interrupted with another source of ads. But I do apologize. That's because of Twitch.
all good, bro.
Yeah, I do. I strongly apologize. I deeply apologize. Yeah, I have no control over the ads, boss. Well, again, we just control the time on it. But like I was saying, team, and I do thank you for coming through too, Dom. I appreciate you so much, boss. But yeah, like I was saying, right now I did call out the 550 mark, guys. I did call it out. I was calling it out since April because I was breaking down the pretty much when we were underneath 480 from going in from 2023 going into 2024. I said the main breakout area that we needed to get above was that 480, which we did a couple handle pattern. And for you guys that's not familiarized with the patterns, I'm gonna show you the cup and handle, which it looks like a cup and a handle that basically represents a nice breakout. So let me go back to it real quick. I do apologize about that because I didn't mean to stress that out. Let me see. Come on. Here we go. So yeah, guys, right here is a cup and handle pattern, and normally that's a signal for the bullish side. So normally you'll get like this type of pattern before a breakout. So normally this is how it sets up, and this is how it looks. I'm waiting for this thing to open. All right, here we go. Go to Windows. All right, cool. So if you notice, it looks like a cup, the base of a cup, and then you have a handle, and then you have your breakout. So if you notice, it's like a cup and handle pattern where you get this nice little U-shaped pattern, a little pullback, but you stay on top of a trend line and you get that nice little break on out, which I call that. We went from the 480s all the way up to the 430s, up to the 550s, which I call this like since April, guys. So I was calling this out. Now the next area, again, because the market is bullish, because you have to understand, the market is bullish due to the fact is it's an election year. So it's going to be very bullish. And then we already had a nice little downtrend in 2022. So right here, you can clearly see on this 5-year week chart that 2022 is when we caught our major pullback in the market. We caught a major pullback in the market because before that, in 2021 and 2020, we were on a 2-year uptrend. We was on a 2-year uptrend. That's when we hit that 480. Then we got rejected in 2022, and we had that nice little downtrend throughout the whole entire year. Then wound up bouncing back in 2023. And as you can see, we did a nice little movement back on up, which created that cup and handle pattern. And all we needed to do was break above 480. Once we broke back above 480, then we started to push higher and higher towards the 500s. Now, as we created this rotation, as you can see right here, guys, and this is what I was talking about. So as you notice my channel pattern, let me I can also take this off too. Let me take these lines off real quick. I'm gonna keep the 550 though. I'm gonna take the rest of these off. And I'm gonna just keep these two because this was my prediction, and this is what I told. This is what I was telling you guys what could possibly happen. So if we do keep this channel pattern, as you notice, okay, the red line is my resistance, and the green line is my support. Meaning that every time you hit the green line, buyers move in. You have a nice, strong bounce back on up. You can see this repeatedly. 1, 2, 3, 4 off that same green line. When every time you hit this green line, this is a buying opportunity where it bounces. Buying opportunity where it bounces, buying opportunity where it bounces. Vice versa, every time it hits the red line, you go in for a put or short for the market to go back on down. Every time we hit this red line, we have a nice strong pullback where sellers do move in, and we have an aggression pullback. So right now, as we are going into 2024 and we are in June, we're nowhere near the red line and we're nowhere near the green line. So meaning that you have room to still rotate towards the upside until we hit that until we hit the red line, as you can see that. So that's pretty much putting us in a rotation. So you can clearly see right here, guys, that right here, let me put it back right here. So yeah, as you can see right here, you get a nice rotation from the bottoms back up to the tops. And look how much room you still have to go. So I called out, what was the first area I called out, guys? I told y'all that the market wanted to go was 550, right? I told you guys 550 was going to be the intended target. What did we hit? 550.12. I told y'all that. So the next area that I'm anticipating for us to go, because again, the market is still bullish. From that 2022 drop and that bounce from 2023 to 2024, we're still going up, guys. We're still on an overall uptrend in the market. So with that being said, the only thing, like I said, the only thing standing in our way right now at the moment, as far as us getting to the 600 mark, is 550. 550 is a natural resistance. So anytime you hit 550, we are gonna expect a little pullback. We are gonna expect a little pullback. We will recover from that pullback and continuously move back up towards the upside. So right now, 550 is gonna be that major resistance where we did get rejected at 550. And we're getting a nice little pullback on SPY. We're gonna be jumping right back in the chart momentarily, guys. So as you can see, 550 is gonna be the major area that we do need to break in order for us to get to 600, in order for us to reach that destination of what? that red line right here, just like we hit it here before. So keep that in mind that we're still on an upward rotation. The market is still on an uptrend, so do expect that we're going to see some more upside even during the pullback. Excuse me, guys. So yeah, right here you can clearly see this. So right now we're on the pullback. Why? Because we got rejected around that 550ish mark. We're getting a nice little pullback down to the 440s. So I mean, sorry, 540s. So right now we're definitely getting a little pullback, but don't expect the market to drop off immediately. Right now is normal for a pullback to occur because again, if you are a buyer and you are going long, you do not want to jump in on the, you don't want to buy in the highs. You don't want to buy into a brick wall where the market is going to go against you. So I wouldn't get caught buying at these tops where I know that a lot of sellers can come in and start to pull the market back on down because you're buying right into a brick wall and you're buying towards failure where as you get in, as soon as you get in as far as buying it, you're going to be losing money immediately. So the best thing to do is why not wait for a pullback at a healthy level where you know there are a lot more buyers to as far as getting in where you can reverse the play right back on up. So I wouldn't mind this. I don't mind something like this. We get a nice little pullback away from the resistance area, away from the 550 where I can get in at these lows and then ride it back up to the 550. So I don't mind a pullback, and I was expecting a pullback because you have to understand that 550 is a natural resistance, just like in the fives. You understand? $1, $5, 10, 15, 20, 25, 30, 35, 40, and so forth. So right now, from the 540s to 545s, that's going to be a channel. From the 45s up to the 550s, that's going to be another channel. But as you have to understand that every time we're going into a new price bracket, we're going to have a strong pullback, just like the 520s, 530s, 540s, 550s. Because you're going from one price bracket to the next. What area that we came out of? What area were we in for the past couple of days? We were in the 540s. Now going from the 540s, you're going to a new price bracket. You're going to a whole different new whole number, which is a 550. That's going to hold up as natural resistance. So instead of buying right at 550, wait on the pullback away from the 550 where you can buy in low around the 540, around the 545-ish area where you can reverse and go right back on up towards that area where you can actually take your profits, get on out, and wait for another opportunity. So right now, I'm definitely going to be waiting tomorrow to see what we get. Because right now, it does seem like between this 543, 85 to 543, 20, I think it's 28 if I'm not mistaken. You can clearly see this was the area that we needed to break out in order to get to the upside to 550. Because you can see every time we hit around this area, we kept getting rejected. We hit this area, we get rejected. We hit this area, we get rejected. So you notice that held up as a strong resistance until we broke above that key level and went for a nice push. Because you have to understand, now that we're above that key level, right, which is right here, you have to understand that strong resistance could turn into strong support, meaning that now that we're coming back to this old resistance area that held us back in the past, buyers can now utilize this area.
Marty Zalizniak says,
Marty, what's up, boss?
what up, Jake?
Oh, let me my chat thing fell off. Let me it always does that. I do apologize because if you was on let me put the chat back on from Traedz right here. Here we go. Yo, just in case somebody do write me. But yeah, boss. But right now, Marty, we're just trying to set ourselves up for next week's trading opportunity. And as I was stating, that I was expecting for us to get rejected at the 550 level, where we will get a nice little pullback because that is a new whole different price bracket going from the 540 to the 550s. And 550 is going to be a normal and a natural resistance because that is the $half mark that's keeping you away from 600. So you'll have 500, 550, 600, right? Because that mid area is what? 550. Now, once we get back above 550, you can utilize that as support and start to move back on up. 560, 570, 580, all the way up to that 600 mark. So right now, you have to utilize that 550 as resistance at this moment. That's going to be the wall that needs to be broken in order for us to get to that potential 600 mark. So right now, we already got rejected. We already had a nice little extension where we got rejected and we started to pull back on down, which is not a bad thing. So right now, that is actually healthy for the market. For the guys who don't understand what that is, a pullback is natural. It's healthy because again, if you are a buyer and you're going long, you don't want to buy these highs where the market can fall on you. You want to wait for a pullback. You have to kind of treat the market almost like a rubber band. When you pull back, and then when you let go, what happens? You get that explosion right back on up. That rubber band effect is your pullback. That's that rubber band getting pulled back. And as we are pulling back, which is kind of like this, your buys are buying in low for that slingshot right back on up towards the upside. So right now, 550 is going to be a challenge and it's going to be a tough resistance because you have to understand that that is a $half mark and that's going to be a tough area to break. So we need to get away from it, get into these low areas, start to create some type of buildup where we can start to create somewhat of an uptrend, an ascending triangle pattern. Right now, we don't have that. Right now, you can see right here, we got rejected from 550 and we started to fall. So now what the next step is and what we need to do or what we should do is start to build an uptrend pattern where we start to move slowly back up to the 550 for the nice push. So something of this to this nature, guys, we need to build something like this where once we do get this pullback, we kind of start to create somewhat of an ascending triangle pattern in a trend line. Oh, come on, line. Why is this thing not? Oh, here we go. Somewhat like this. We get this nice little pullback, but we start to build somewhat of an ascending triangle pattern where we utilize that ascending triangle pattern to build right back up towards those highs. So right now, do expect a pullback. That's naturally normal because you're pulling back from a tough area because we didn't have enough buyers, we didn't have a lot of volume. So right now, that's still as far as the buyer side, that's considered weak. The selling side is considered strong because they're holding that level to the best of their abilities. They're keeping you away. They're keeping you away from crossing over towards this side, right? So that right now, this will be considered the bearish field because we can't cross above this key level. So again, if we know this area is being protected by bears, okay, get away from this area. Wait for a nice little pullback where majority of the buyers are located, where the buyers are not allowing the bears to crack a certain key level where they're trying to hold to move it right back on up towards the upside. So the best thing to do is, even from this standpoint, let's look at it from this standpoint, right? Okay, at this area right here, you can see clearly that the bulls are refusing to let the bears crack this key level. So meaning that they're holding a specific level that can be a strong floor. Why could this area be a strong floor, which is around the 543 level? Is because you got to remember, back in the past, that was a strong resistance. Because every time we hit, we kept getting rejected. Every time we hit, we kept getting rejected. Because even before this breakout, this was the old area that the bears did not want the buyers to cross, right? Because every time you hit, you fall. You hit, you fall, you hit, you fall, right? Until we got that nice breakout where the bulls took that territory away from the bears. Now the bulls own that territory as long as we hold above it, because now they can turn this into a bear trap. Every time we pull back, you get a pullback failure. So that means that you start to trap the bears, more buyers move in, start to create somewhat of a short squeeze back on up towards the upside. So all they're doing is just reversing the trap. They're going from a bull trap now to a bear trap because we're above that key level. So as we do go into next week, the main focus, and if you are long buyers and you want to go in and you want to see us push back on up, what we're going to need to do after this pullback, guys, is we're going to definitely have to see some type of build back on up. We're going to definitely have to see some type of higher low build where we can start to create somewhat of an uptrend pattern, creating some type of squeeze. So right now, let me try to extend it as much as I can. I know it's huge as hell. I do apologize. So on a 30-minute time frame, guys, so what's going to happen, what would need to happen, again, that the buyer is going to have to come in. Because right now, we're still on a downtrend pattern. We're still on a downtrend pattern. But the reason why I got this line here, because this is what would need to happen for the buyers. In order for us to get back up to these key levels, we're going to have to create some type of a bounce. We're going to have to create some type of bounce where buyers can hold a key level. Let me take this one for right now so y'all don't get confused with the lines. I do apologize about that. Right here, where you come down, you bounce back on up. You come down, you bounce back on up. And you notice that space gets tighter and tighter and tighter and tighter until we get a nice little push. So look at all this, because you have to understand, guys, look at all this room that we have from this rejection point down to the support. Look at all this room. Look, all this room that we have to move around. All this room we have to move around. So in order for the bulls to get us back up to where we need to, what we need to happen is on this pullback, we're going to definitely have to hold this key level and start to slowly build an uptrend back up, thus making that space in between the purple line and the red line tighter and tighter and tighter and tighter for a potential squeeze where we could see a reversal back on up, kind of like a huge U-shaped pattern where we leave from that area and return back to it. So something like this, guys, something like leave it from this area and build some type of uptrend where we can get a move back up towards the upside. See that? Where we go right back and challenge that resistance area to get us back across this area here. So look at all this space that we have. So it's going to be a lot of up and down, a lot of choppiness, as you can see. It's going to be a bounce in here, up here, bounce here, something like this to this fact till we break out or crack back down. So as you can see, Right now, this is the start of a new trend line. This is the start of a brand new trend line. So you have to give it some time to build, guys. Because look at all this again. Look at this huge gap. Look at this huge space in between this ascending triangle and in between this resistance line. We have so much space to work around to where we can see a lot of up and down movements, a lot of up and downs. But the main focus is as long as the bulls can hold the key levels around this 543-ish level right here, where we can utilize this old resistance to turn it to support and just stay bouncing on top of that. We can utilize that area to go back up towards the upside. So, but if they don't hold it and we do crack, do expect some more pullback to more lower levels, such as 541.50 and even down to the 539.57. Why did I call out these areas? The reason why I called out these specific areas, because you have to realize, look at the impact every time we hit around those areas, and look at the buying impact. Those buys moved in aggressively every time we hit this green line, and the buys moved in aggressively every time we hit the yellow line. So you can clearly see where the strong demand zone is between 530, the 539.57s and also the 541.50s, because you can clearly see the impact every time we hit these lines. So as we do come back this way, and say for instance we don't hold this specific level of the 543s, and we do come down this way, do expect that we will have buyers trying to move in these specific areas. We're going to have the 541.50, and again you can clearly see this impact on the buying impact on this side. And also, you can see around the 539.57 when you had buyers. When you bounce, moved on up, bounce, moved on up. And after that, they got on top of 541.50 and had a nice, stronger move. So these areas will be important coming into next week. So if we do get a nice little pullback this way, do expect buyers to move in between these two key levels. You can clearly see this from this point to this point, and we have that nice move back on up. So do expect that. So right now, at this moment, we do have an opportunity for bulls to hold this key level and move back on up. But at the same time, we're also on a downtrend pattern as well. So what will need to happen, if we do want to see some more upside, to keep us on the upper portion of this channel, that we're going to have to hold above the 543.26 to 543.80 levels, where you clearly see right here where these buyers are trying to hold. Because right here, where you can clearly see a pullback failure where the bears tried to pull it underneath what? Let me move it over this way so you can see the price. I apologize. Underneath 543.85 and even 543.26. But you can clearly see that that buying pressure kicked right back on in, thus pushing that body of that candle right back above 543.85, thus giving us a lower shadow, a long shadow showing you where the buying pressure was at. So you can tell that the buyers are trying to hold this key level of 543.85, right? So right now, what would need to happen, if that's the area that they intended to hold and try to utilize, that we definitely want to see a downtrend break out towards the upside. We will continue to hold this uptrend, this somewhat of an ascending triangle pattern, and move back up this way. So it's all up to the buyers to see if we can hold this key level, start to move our way back on up, and continue the uptrend pattern. If not, we will get in a more of an aggressive pull all the way back down to these key levels, where we will see more of a deeper downtrend, where we can clearly see this. So instead of utilizing the 543s, we'll have to take this line and go down even further to these key levels, where again, take this off, take this trend line off, because therefore we'll crack that trend line. We will come down even lower to these levels of 541.50 to this 539.57. And again, why did I call out these areas? Because look at the aggression of buying on these specific marks. We come down, buyers move in. We come down, buyers move in. Even to this level of 541.50, we come down, buyers move in. And again, look at the aggression, look at the aggressive buying off of this 541.50 mark, where buyers pushed all the way up towards the 548s. So these two specific levels is going to be important if we don't hold this key level here. At the moment, 543.85 is the level that the buyers are trying to hold going into tomorrow. So again, it's two separate scenarios, guys. If the buyers can hold 543.85, we can definitely utilize this area where we can start the U-shape and start to curl our way back on up, giving us a downtrend break, moving back up towards the upside, right? That'll be scenario number one. I can draw it out real quick too to show you guys. So scenario number one, if we do hold this key level, can I see the price on this bad boy? Yeah, 543.85. So we can hold this key level. we can definitely get a nice little move back up towards the upside, right? That'll be scenario number one. So, however, if we crack that, if those bears come in aggressive tomorrow and take out the 543s, the next key level and potential level would be here, 541.50 down to where? 539.57. Why? Because again, look at the aggression. Look at the aggression. Buyers here moved in, buyers here moved in. So again, if we lose 543 coming down to this key level, this is going to be the next area. It'll be 541.50 and 539.57 will be your next area. So that will continue the downtrend setup. That will continue the downtrend setup. We will see more downside because now we'll be underneath 543 where we can utilize that basically, and I can show you how we can utilize this. So how we can use this to the best of our ability, even on the long side. Okay, wait for us to come down to these levels where you can reverse back on up to what? These key levels where you can buy in at these lows and sell near this area of now that'll be resistance because that will put us right back under this area where we got rejected before, right? So once we get this little drop around the 541.50 down to the 539.57s, we can utilize this as a bouncing potential to move our way back on up towards the 543s until we get back above this area and turn this back to support again. So again, it's two different ways and two different scenarios this can happen. Again, if the buyers can maintain the 543s, we will continue up towards the upside. However, if the bears overpower the bulls and take out this level, do expect to come down to the 541.50s, even lower to the 539.57 for the possible strong area for buyers to move in aggressively around these key areas for a nice little push back up towards the upside. So we have two different scenarios that can happen and that can take place, guys. So it's two different scenarios. So we got scenario one that we discussed, which would be first and foremost, because now that we're still on top of it, would be what? The 543.85-ish level, the 543.26. You can see right here where the bulls do move in. Again, if we do hold this area going into tomorrow, we can utilize this area to start moving back on up. However, as I mentioned before, if we crack these price points, if these bears do move in aggressive and take out that key area, because you have to understand, now that 543.85 to 543.26 is going to turn right back into resistance again, where you will now get rejected and pull back down. Get rejected and pull back down.
Have a great rest of the weekend, Jay.
You too, boss. Thank you so much for coming through as well, boss. Thank you so much for coming through. Like I said, I'll be on here again, probably, guys, for another about a good hour, well, not an hour, 30 minutes, for a good 45 minutes. So, again, guys, since I do have you guys here, if y'all have any questions, comments, or concern, or you do need me to look over some certain tickers, guys, do feel free to reach out to me. I'm right here to help any and everybody. So right now, I'm going over SPY. We're trying to basically come up with a great scenario, what can help us, whether it's on the put side, whether it's on the call side. Right now, for puts, we are definitely still on a downtrend, but puts, you have to understand that we have not cracked 543.85 just yet. That can still be utilized as support where buyers can move in and push it back on up. However, if we do crack 543.85 to 543.86, that'll turn back into resistance, and then we can see the repeat of a nice little pullback all the way down to what? You can clearly see this right here. Anytime you got underneath these key areas, 543.85, 543.26, what happened? You get a nice little pullback down to what? 539.57 for the nice rotation back on up to what? These areas right here, 543.26 to 543.85. Same thing can repeat itself all over again as we do come down this way. Because if we lose 543.85 or 543.26, we can utilize between the 541.50 down to the 539.57 where we can reverse and go back up. And I do apologize. Let me move it over some more. I forgot that I got this whole thing this way. I do apologize, guys. So yeah, right here. So what I'm saying is we can utilize, if we crack these price points, we can utilize these price points for the reversal back up towards these key areas, because those areas will now be considered resistance. Again, something like this to this matter, where you get rejected underneath that 543.26, pull down to what? That 539, where you bounce from 539 back up to what? 543.26. So again, if we do get a strong pullback, do expect buyers to be trying to move in between the 541.50 down to the 539.57s. Right here, where we can see a repeat from the past where we got pulled back and we rotate it back up towards these areas until we get back above the 543 areas and turn this back into support. So right now, again, as I stated, well, I can't get this block. Oh, here we go. Yeah, guys. So as I stated, it's two separate scenarios that we can go. I mean, right now, overall, we're on a downtrend, point blank. Right now, we're still on a downtrend setup. So again, what we need to happen is the bulls will need to retain and hold this level of 543.85. Hold that support for possible movement back on up. When you get a downtrend break, it start to move back towards the 545, 546, and so forth. However, again, if the bears moving aggressive, do expect that these areas, these two red lines here that was holding up as support is going to go back into resistance, where we would see a repeat of this when you are underneath it. When you hit, you fall. You hit, you fall. But then when do you bounce? 539.57. You get a nice aggressive buying at 539.57 for the movement back on to what? 543.26. See how it repeats itself over and over? Here, here. Same key points. Look at this. Same key areas. 543.26, 539.57. Look at this. Bounce, rejected. Bounce, rejected. Same key areas. So as we go into tomorrow, if we crack this area, and we do crack these two specific lines here, do expect that we could see a repeat of this underneath it. Now, however, if we stay on top of it, we could utilize this as a reversal to go back up towards the upside. If the buyers can hold 543.85 to 543.26, but it can utilize this old resistance as support and go back up towards the upside. So again, just keep that in mind, guys, on these different ways that we can go. So as I stated, we will have some data coming out. So we did break down everything. NVIDIA still on an uptrend. As far as NVIDIA definitely needs to stay above 526.88. That's going to be the main key focus as far as NVIDIA. 526.88 they're gonna need to hold a floor if they want to push back up towards the upside of 130. So right now you are testing the 526, which is being treated as a magnet. It's kind of going up and down, where you can kind of see the bears and the bulls both kind of battling right in between this price point, where the bulls are trying to stay on top of it and the bears are trying to stay underneath it. Apple still having a nice fade right now. It does look like an H pattern is going to be forming on Apple. What is an H pattern? H pattern is basically it's a signal that's letting you know that some more downside is coming. So pretty much this is what to expect if we do see some more downside on Apple. So for sure on here, let me go to the setup real quick on Apple to show you what an H pattern is, how to use that to the best of your abilities, guys. So right here, for example. So right here, you do have this H pattern, and the H pattern is kind of like it's pretty much a bear flag pattern, but it looks like a lowercase h, where you will get a nice, some more of a sell-off, pretty much. So you go here, and you'll get the back portion like an H, and you get this little bounce back on up, but going right into resistance where you get another drop on down. So right now, could we see more downside on Apple? It's a possibility, because the way it's setting itself up, we could see more downsides, guys. Because right now, we are getting rejected underneath the 210s to 208s, where we are seeing more pullback. We are starting to see a little bit more aggression on the bears, which they're trying to keep Apple underneath the 210, 208, and try to pull it back down to even lower levels. So do expect on Apple right now. So Apple's definitely weak at this moment. So let me see, but I will be keeping my eyes peeled on SPY to see where we go, to see if we hold these key levels tomorrow. As I stated, we will have some data coming out, and I will repeat it before I head on out. Cause like I said, I was just doing a quick little breakdown. But guys, if I don't have anybody else coming through, if y'all have any questions, any comments or concerns, I mean, I will be jetting out of here a little bit early. Again, I was just doing a quick breakdown to let you know how to prepare ourselves for tomorrow. Again, we do have to hold these certain specific key areas. If we want to see some more upside on SPY, we have to hold above that 543 mark. Again, if we do lose to 543, do expect that we're going to pull back to even lower levels, down to the 541.50, even down to the 539.57, if we get an aggressive pullback and the bears take out these key levels that the bulls are trying to hold. So again, guys, if y'all have any questions, comments, concerns, guys, y'all have the floor. Let me know if y'all want to talk about anything. If y'all want me to go back over lessons, again, I do have 2 lessons. I have the Ely lesson, and I also have the Breaking Bad method. So if you having issues as a trader and you want trying to overcome certain things, you're being impatient, being on the wrong side of momentum. Why does it feel like every time you get into a trade you lose? That type of situation. So if y'all have any questions, comments, or concerns, guys, I mean, again, y'all have the floor. I'm here to help you guys with whatever y'all need. I mean, take advantage of this opportunity. If y'all need help, feel free to reach out to me. I'm here to help you guys. Other than that, I mean, I'm going to be shutting it down, and we're going to be preparing ourselves for tomorrow's opportunity. But again, don't be afraid. No question is a stupid question. If y'all have any questions, comments, or concern, guys, do feel free to reach out to me. I'm here to help y'all with whatever you guys need. Any stocks, throw out any tickers. Again, if you need me to break down any lessons, anything of that nature, do feel free to let me know. But before I head on out, we're gonna go back into the lobby real quick so I can break down. Well, matter of fact, I can use my economic calendar here, so we don't have to do all this bouncing back and forth. This is what to expect as far as the economic calendar for the next week. Let me bring it up real quick. Where's my Patreon? Where you at? There you go, Patreon. 24th through the 28th. So I have it right here, guys. I have it set. So we're gonna have to go all the way back out of our lobby. So let me expand this. So like I said, just be on watch. We don't have anything major Monday. We will have. Let me do that. We will have consumer sentiment confidence. I'm sorry, consumer confidence, which will be at 10 o'clock, 10 a.m. That'll be Tuesday. Wednesday, we're gonna have the new home sales data. That'll be at 10 o'clock, followed by crude oil inventories. That'll be at 10:30. Thursday, we're going to have durable good orders, GDP, and initial jobless claims all at 8:30 on Thursday. And Friday, we're going to have core PCE data at 8:30. 9:45, we're going to have Chicago PMI data. And at 11 o'clock, we're going to have the Fed monetary policy report. So that's what to be expected. So Monday, we're not going to have anything really major as far as the economic data. So the main thing is going to probably be based off of volatilities. So volatility and patterns. That's pretty much what we're going to be looking for until we have some good economic data that come in, that can add some type of impact in the market on a good way or a bad way. But as far as tomorrow, we don't have anything major, so I'm just letting you guys know. Nothing major tomorrow. So 9 times out of 10 is going to be based off of volatility tomorrow. So we'll just keep our eyes peeled to see on how the market is going to set up. So you definitely want to keep your eyes peeled going into tomorrow at these key levels starting off first. Between 543.85, 543.26, because again, that played a major role week before where that held up as resistance. So we want to ask ourselves, as we are around this area now, pulling back, could these buyers, holders that support utilize that to push back on up, get a downtrend break, or will the bears come in aggressive, take out the 543 and put us back down to even lower areas of 541.50, even down to 539.57, which is not bad because we can clearly see where the buyers moved in aggressively, which is around 541.50 and 539.57. You can clearly see this. So, 2 case scenarios can happen tomorrow, and we'll get ourselves ready to see on how we go from there, guys. So right now, we are still in a downtrend setup. We are still pulling back. So tomorrow, definitely keep your eyes peeled on these 2 key levels, to see if the buyers will hold again. If we do get taken out, do expect some more pullback towards the 541.50 to that 539 mark. So again, guys, if y'all don't have any questions, comments, or concern, and again, I'm about to roll on out. Again, I was giving y'all a quick scenario, quick breakdown on everything. Again, like I said, I try giving people the floor. If y'all have any questions, comments, concerns, about lessons or anything, I'm here to help you guys. If nobody's in, then we're going to just bounce out. And, I do thank, you guys for joining me, for going, through this little quick breakdown real quick. I do thank you so much for everything that you do. And we're going to keep it rocking and rolling. And let me see if I got anything else left. I think that should be it. But yeah, guys, I think I'm about to go ahead and wrap it up, man. I just wanted to hurry and break it down so you'll have an idea on how to set yourself up for tomorrow to make sure you're on the right side of momentum. So, guys, I do thank y'all for joining me, man. I'm definitely about to be rocking and rolling, and I do hope everybody have a blessed night, and we're going to be gearing up for Money Monday, and we're going to just be taking it from there. But till then, guys, and tomorrow we'll be in at 9:15 Eastern, 8:15 Central. So when we'll be taking it from there. But other than that, guys, I do hope everybody have a blessed night, and we're going to be rocking and rolling for tomorrow, man. Peace.
Oh,